Hey everyone, and welcome back to the Fish Market, where we teach you how to fish for gains. So today we'll be talking about what is Terra and the Terra network. But before we start, I just wanted to say thank you to everyone for subscribing, because we just hit our 500 subscriber mark. So thank you so much, and we might be doing a giveaway contest soon. So if you find this video useful, do remember to please help us like and subscribe for the algorithm, and let's get started. Okay, so what is Terra, and is it a new and better financial system in the making? So let's explore. So what is Terra? Terra was founded in 2018 by a South Korean firm, Terraform Labs, and Terra is basically a proof-of-stake blockchain protocol for issuing algorithmic stablecoins, processing transactions, and running DeFi applications. So what problem does Terra solve? Terra's goal is basically to disrupt traditional banking and finance via the mass adoption of stablecoins and DeFi. So what are stablecoins? Basically, they are crypto assets that are stable in their price because they are pegged to fiat currency. So for example, one US dollar stablecoin such as BUSD or USDC is basically $1 in real life. And DeFi is basically decentralized finance, and it's basically an application that mimics financial products on the blockchain. So decentralized stablecoin is an important transition from fiat to crypto because without having stablecoin, the volatility of the crypto market makes it really difficult for normal people to use it properly, because if you are only able to trade in Bitcoin or Ethereum and it's always moving up and down, then it's very difficult for you to actually use it to determine what prices are and how to use it for day-to-day commerce when the price keeps changing and moving. So this makes stablecoin one of the key cornerstones of DeFi and crypto, and therefore Terra, being one of the most popular algorithmic stablecoin issuer, one of the more important crypto projects. And what is Luna? So Luna is basically Terra's platform and staking token. So previously I mentioned Terra is a proof-of-stake protocol. So Luna is its proof-of-stake token, and it's the one that you use to stake and to vote for governance and for the platform and things like that. So Luna also acts as the collateral for backing its stablecoin, and is used to stabilize the price of its stablecoins. What does this mean? Let me explain right now. So one of its most popular stablecoin is UST, and it's actually the 5th largest stablecoin after USDT, USDC, BUSD, and DAI. It currently has a market cap of over 2 billion, and it is one of the top 50 crypto. So it's pretty high up there within the top 50 category. And unlike USDT, USDC, BUSD, and DAI, UST is a more decentralized stablecoin compared to those. I will go into the different stablecoins and how they are centralized or decentralized in a future video. But for now, generally people think that UST and DAI are the more decentralized one. But between DAI and UST, UST is believed to be even more decentralized. So how does UST work? So UST stands for US Terra, and it's basically pegged to $1. So when UST is below $1, the market will exchange $1 for $1 of Luna through the protocol, and they will basically take their Luna and then sell it for $1 and earn the difference. So this would reduce UST supply and thus increase the price of UST until the UST price is back to $1 again, so also known as peg. But when UST is above $1, the market will exchange $1 of Luna to $1 and sell the UST to earn the difference, therefore increasing the supply of UST and reducing the price, and they repeat this until it's pegged again. So basically, the more demand for Terra stablecoin, the more UST will go up in price, and therefore the more Luna will be burnt. And when the more Luna is burnt, the supply of Luna reduces, and you get actually more price appreciation for the Luna token. Okay, so if that wasn't clear, I drew out some diagrams, and basically when UST is below $1, for example, it's at 90 cents, people would basically buy UST, so that would increase the price of UST, and then they would go through the protocol to convert $1 for $1 worth of Luna, because on the protocol end, they recognize that $1 equals to $1, and they will be able to mint out $1 of Luna. So now you basically purchase this asset for 90 cents, and you swap it into the exchange, and it will give you $1 worth of Luna, and you would sell that Luna, and you would capture a 10% arbitrage premium, or that's basically your profit. So that act of arbitraging it would cause the price of UST to go up by people buying it, and by removing it from the supply, because you exchange it into Luna, you will actually reduce the supply as well. So the act of buying it and the reduction of supply is two ways that UST goes up in value. And similarly, when UST is above its peg, like $1.10, you would actually want to take your UST, right? So you want to take your Luna. So it's just the other way around. So you take your Luna, swap it around. So you take your $1 of Luna, and then you can convert it into UST, and it'll give you 1 UST. But because 1 UST is worth $1.10 on the open market, you will take your UST and then you will sell it, and then you capture a 10% arbitrage risk-free profit. So when the price is too high, people will just keep repeating this, keep throwing Luna into the protocol and mint out UST, and they will just keep selling it until the price goes back down to $1. Yeah, then of course people who have UST on the platform, on the protocol, would also sell their UST into Luna directly, and then just send the Luna back into the protocol, and they'll give them UST, and they just keep repeating this until the price goes back to $1. So this is what we call an algorithmic stablecoin, where they actually get the price to peg to the underlying by using the supply of the asset and controlling that as part of the algorithm. Yeah, so hope that makes things clearer. Okay. And the founders are public, so they are Do-Kwon and Daniel Shin, and they have a pretty good track record. So Do-Kwon does a lot of sharings online, and he recently got featured on Real Vision together with Raw Paul. So that's a pretty interesting interview. If you haven't watched it, do check it out. And I think in terms of the team's credibility and track record, it's certainly there. Okay, so the Terra ecosystem is getting bigger, and right now they have the payment processors like Memepay and ChaiPay, and then they have stable coins like UST, they have the native coin Luna, and they have synthetic assets like Mirror, as well as a lending, savings, and borrowing protocol called Anchor, and there are AMM DEX called Terraswap. So I'll go through this one by one. So Mirror is basically a protocol that allows for the creation of synthetic assets that track prices of real-world assets. So just think of it as your Robinhood, your TD Ameritrade, your iFast, your Interactive Broker, these kind of brokerage trading platforms. And they actually mirror the stocks on the blockchain. So you can actually purchase your Tesla, Alibaba, Facebook, or your FANG stocks, and even your gold, your commodities, your oil, things like that, on the blockchain using Mirror Protocol. And the benefit of this is that you can enter these stocks, which means you can buy or sell these stocks at any time, at anywhere, without a brokerage account. So if your brokerage account is down, for example, then that probably won't happen with a DeFi protocol that is always 24/7. And one really interesting benefit of a 24/7 platform is that, let's say you know a news just happened and it's not yet market open. So for example, let's say Google was caught in a very big data privacy breach, for example, or their server went down worldwide, and you think that the price of Google is going to fall quite badly. You can actually sell your Google shares, if you have Google shares, before the market actually open. And this is actually a good way to act on information 24/7. This is another way I use Mirror to basically act faster on information. Is sometimes the pre-market can look really, really bad. Like for example, the Nasdaq futures, the SPY futures, the Dow Jones futures can be like negative 1-2% during pre-market. So I know probably shit's gonna hit the fan. And let's say I have a stock that is basically more risky, like a risk-on asset like Tesla, for example. I could actually sell my Tesla shares before the market actually open, or the pre-market actually opens, because Mirror will only change the Tesla price once pre-market opens, but they don't actually factor the future prices into consideration. So that allows you to be sort of one step ahead of others by being able to buy and sell your shares at any time 24/7. And I find that pretty useful for Mirror. Yep. Additionally, Mirror allows you to long and short farm, and this gives you additional yield for holding your assets or for shorting your assets. So I'll explain this in more detail in my next video, and just keep a lookout for that. Okay, so now we look at Terra's payment processors, which I believe is one of the first few apps that came with Terra. So now let's look at Terra's payment processors, Chai and Memepay, which are payment processor integrators, and I believe they are one of the first few apps that came with Terra. Terra developed this Chai as its first app. And Chai is basically a payment process integrator. So let's say you run an e-commerce shop, like you use Shopify or you have your own WordPress store, for example. You can integrate Chai into your website, and it allows your customer's checkout process to be similar to PayPal, for example. And they use the blockchain to actually run it. So that's pretty interesting. And Memepay is similar to Chai, but it's for Mongolia. And it's actually used by 3% of Mongolia's population. So Chai is really interesting because it bridges real-world use cases into the blockchain. And when users use Chai, they basically face and deal with fiat instead of crypto. And they don't have to deal with all the crypto complicated stuff like your private keys, your wallet addresses, etc. All of that is settled on Chai's backend, which uses the Terra network to process the transactions and the payments. And Chai is pretty heavily used in Korea, and they are in many different outlets and e-commerce websites. So the benefit of using Chai is that it allows for faster settlements and lower fees. Because if you use your existing payment processor like your Visa, your PayPal, your Stripe, etc., it actually does involve longer settlement time, which means you actually need to wait longer before you can actually use the money that they pay you. And the transaction fee is often higher, sometimes as high as 3% or even higher. And if you use Terra, or if you use Chai, which uses Terra on its backend, right, it's a lot faster settlement. So you actually get your money in 6 seconds. And what I mean by settlement is that when you get your money in 6 seconds, it's not just something that is pending. It's actually something that you can use straight away, immediately, to either cash out or to send to someone else. And the transaction fee they charge is actually a lot lesser at 0.5 to 1.3%. So in Chai, the payments are actually made in KRT, which is Terra stablecoin pegged to the Korean won. So KR stands for Korea, and it's basically Korea Terra. And the more KRT is needed, the more Luna is burnt to mint KRT. So UST, KRT, they both have the same mechanism, where if the demand for KRT goes up and it becomes unpegged, then they will actually sell more Luna, or basically not sell, they will burn more Luna in order to mint more KRT, and therefore if you hold Luna and more Luna gets burnt because more people are using Chai, which requires more KRT, then your price of Luna would appreciate as well. Yeah, so they have 1.6 million users. Actually, if you check the latest statistics, they have around 2.5 million users, which is about 5% of Korea's population. But this is not daily active users. Daily active users, I think, is not as much. It's probably 100 to 200,000 daily active users. You can go to Chai Explorer to actually check out their statistics. Because it's using Terra as a blockchain, everything is open and it's public and it's transparent, so you can actually see how many people are using it live. Yeah, so this is Chai Explorer, and you can see that there are daily payments, there are daily transactions, active users, and total users. And you can see that it is actually slowly going up in terms of total users. So the more total users there are, the more these users will transact in KRT, the more they need KRT, therefore the demand of KRT goes up, and therefore Luna price goes up as well to maintain the peg for KRT. Okay, so what is Terraswap? Terraswap is basically the Uniswap for the Terra ecosystem. For those that don't know, Uniswap is basically exchange, but it is decentralized, which means there is no centralized market maker or centralized authority controlling Uniswap. Everybody are swapping peer-to-peer thanks to the liquidity providers. And Terraswap's daily trading volume is in the millions, I think around 20 million a day on average. And sometimes on peak days, it can go as high as 200 million. And if you are a liquidity provider, you can earn trading fees from each swap made. If you are also a Luna staker, you also earn transaction fees for each transaction made on Terraswap. Okay, what is Anchor? Anchor is their savings protocol, and it actually provides low volatile, which means stable yield of roughly 19.5% on your UST. So that's pretty insane, because right now banks are providing like 0. something% of your of interest, and Anchor provides 19.5%, which is literally unheard of in any type of savings plan, right? It's probably even higher than a fixed savings plan where you can't withdraw your money. For Anchor, you can put in money at any time. You earn your APY, your fees, your interest every 6 seconds, because that's the block time for Terra, and you can actually withdraw at any time. So there is no restrictions, there is no lock-in period, and the fees and everything is transparent. So it's pretty awesome. The fees for using Anchor is super cheap. I think it's a fixed fee roughly between $1 plus every time you deposit money in, or when you withdraw it's only 25 cents. So it's not free, and there are currently about 684 million locked in Anchor. This 19.5% APY does range between 17 to 22%, and I don't know if this fees or this high yield can last forever, but I know it can definitely last at least for 1 more year. So if you want 19.5% for 1 more year on your stablecoin, then Terra is pretty attractive for having Anchor as its savings protocol. And Anchor also allows you to borrow by providing your Luna as collateral. So Anchor is basically like a savings, a borrowing, and a lending protocol all in one. In fact, it's also being cross-chained by Orion Money. So if you have your stablecoins like your USDC on Ethereum, Orion Money is a cross-chain protocol that allows for Anchor to be on different chains by helping you to bridge your stablecoins into the Terra ecosystem. So your returns, it's not as high as 19%, but it's about 15%, which is higher than basically most of the savings protocol on Ethereum. I think Aave is giving nowhere close to that, maybe about 3% or 5% at most. They are able to obtain this high savings rate through a diversified stream of staking rewards from major proof-of-stake blockchains, together with people wanting to borrow money from the Anchor reserves. So you are not just earning 19.5% for doing nothing. You are basically lending it out, and people are willing to pay relatively high percent for the fees. Not as high as 19.5%, but somewhere close to like 10% APY. And then the remaining 10% comes from the rewards from the staking rewards from depositing their proof of stake tokens into the Anchor protocol. So the Terra ecosystem is pretty big. They have your yield farm, your wallets, your IDOs, which means initial DEX offering, as well as lending protocols, synthetics, NFTs, and many others. So they have quite a robust ecosystem, and this is growing really quickly. So they are actually growing. If you go to Luna staking, lunaairdrops.com, you can actually see the amount of protocols that are going to be launching soon. And whenever this protocol launch, they might actually do an airdrop. So if you stake Luna, you're not just securing and protecting the integrity of the transactions on the Terra network. You are actually able to receive some airdrops from these protocols if they were to do a Genesis airdrop. So not all of them will be doing an airdrop, but some of them will. Like for example, Anchor did an airdrop. Nearest airdrop was worth about $1,000. If you sold it at the all-time high, it's like over $2,000. And Orion and Nebula will be doing airdrops very soon. Orion is the Orion Money that I talked about, where they're doing the Anchor cross-chain savings bank. That's how they position themselves. And Nebula is basically like a ETF manager. So Nebula, for those who like to do ETFs and like to do investments, Nebula protocol helps to streamline that process. Yeah, so owning Luna is basically like investing in the Terra ecosystem, and you also do get free airdrops from time to time, or like free money essentially. Do note that the amount of airdrop that you get is proportionate to the amount of Luna that you stake. So it's not, apart from the mirror one, where if you held uni tokens, you get 220 mirror fixed. For other airdrops, I think it is proportionate, which means the more Luna you stake, the more you receive in airdrops, and vice versa. The less you stake, the less you receive in airdrops. I wouldn't recommend aping into Luna just for the airdrops, because you probably will spend a lot of Luna if you want to get a sizable airdrop. But this doesn't mean that Luna itself is not worth holding on to, because if you believe that all of these protocols will be something useful and have demand, whenever people trade in any of these protocols, they need UST. And if they need UST, Luna goes up. Secondly, if they do a lot of trades, a lot of transaction fees goes to Luna as well, and Luna goes up. Alright, so in conclusion, Terra right now, the popular apps are Chai, which is a payment processor, Anchor, which is a savings, lending and borrowing protocol, and Mirror, which is an investments protocol. They also have e-commerce payment integration, like Kado is developing an app that you can actually integrate with Amazon to use UST to buy stuff directly. I believe that might be a Google extension, but I'm not super sure. And basically what they're trying to do is trying to recreate the financial system onto the blockchain and integrate it with real-world use cases. So I find that pretty fascinating. So as more projects are built on Terra, it is creating a complete financial ecosystem of real products and solutions. And this is what Kwon refers to as Terra Finance, or TFI. And I believe that the use of blockchain for everyday payment is the start of mass adoption. And having stable coins and easy to use financial products will help crypto to go mainstream. And that's what Luna is trying to achieve. And yeah, that's the end of this video for what is Terra. Hope you guys found it useful. And do remember to like and subscribe for the algorithm. And I'll see you guys again in the next video, where I'll go through more about how to use Terra to actually achieve FIRE, which stands for Financial Independence and Retire Early. So check out that video very soon. See you guys again. Bye.
Baby fish, do 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 do. Baby fish, do